Well, that was an awesome 24 hours, which caps an incredible 13-week rally out of the bear, and Bitcoin has been the market leader during this time. This week, I've been telling you guys not to chase after this parabolic rally with Bitcoin, and now I hope you can see why. So where's the next entry? Or where's the next price to stack sats? I'm Doc Severson for Ready, Set, Crypto, and here's your 1-minute market for Thursday, June 27th. The first topic that we have to tackle is whether or not this is a legitimate bull recovery that's just started, or whether this is a bear market rally, as some have recently suggested. My first response to that challenge is, seriously? I think that when we put today's market in the context of the monthly log chart, it makes it clear to me. And as long as the monthly linear chart continues to put in higher highs and higher lows, then we're good. The probabilities are in our favor that this larger time frame trend will continue, but not before shaking off the pikers with some short-term volatility, as we're seeing. And when we move down to the daily chart time frame, the price character has flipped since late winter to quiet and trending price character, which is the primary signature of the bull. But that leads me to my next point, because we've certainly experienced a runaway parabolic bull move, and it's extremely likely to transition at this point to a sideways and volatile character. Sideways and volatile with big price swings inside of here. This may last for a few weeks at this point, and maybe even a few months as Bitcoin digests its recent 333% gain. Range expansion leads to range contraction. Now, during this contraction period, we'll see some big volatility. We don't know where it's going to top out. We don't know where the bottom of this is going to be, but we can almost be assured of some very, very large swings during this period. This is going to create a volatile paradise for futures traders, but we'll also see some value entries down in this area, which is what I'm assuming that most of you out there want to participate in. So let's discuss some structured ways that we can spot these value entries. Where is our next buy point? The first and simplest method of finding a buy point is the swing test. Like any method, it has its flaws, but when it works, it's awesome. Let's go back to the last bull. So I'm going back here to 2016 and spot the last swing test and see how they worked. A swing test happens when the price comes down to retest a former high in this case. So in other words, we position a swing high, the price comes down, it breaks through there, and then it retests that swing high from above and bounces from there. You can see that this horizontal level here at $760 per Bitcoin was a perfect swing test, great entry. You had to wait for it though. So once we identify this swing test level, we can simply put a good till cancel limit order to buy in at this level and wait for the price to come down and tag us if it ever does. More than likely, there's going to be a lot of orders there. Let's see how the next swing played out. So we'd now have a swing level here at about 1,300. Did that one work out? Did we get a swing test entry at that point? Well, it looks like no, the price ran away from it. So you can now see some of the liabilities of a swing test entry is that sometimes the market doesn't cooperate and it runs away from it. I can see the next swing here at about 3,000. Let's see whether or not that provided us with a swing test entry. Did the price get down to 3,000? Yes. Here's a perfect swing test entry that was back here in September of 2017. You can see this horizontal level right here at 3,000. Former resistance becomes new support as the price comes down to test it. Now, does this feel very good to enter? I would say no, does not feel very good. It does not feel very safe to enter at that level down there. But again, this is where you identify the swing and say, well, if the price ever comes down to this level, and why would you ever think that it would? Because the price is all the way up here at 5,000, but this is the problem. People chase after this entry up here and not wait for the entry down here. So we need to shift your dynamics of entries to the ones that feel bad because they perform the best. Let's keep going here. Let's see whether or not this swing here at 5,000 So that's a former swing high. Is this going to be tested from above and give us an entry point? And let's see, we got close to it at about 5,600, but at this point I would say no. So you can see some of the advantages and disadvantages of the swing trade entry is that they end up being great entries in a bull market, not a bear market, but a bull market. They are excellent entries if you can snag them. The swing test entry is great. However, you got to be patient for the order to fill. And if the market is strong enough, it may never come down to that level to fill your order. All right, so the next tool that we can use to find a suitable buy spot is going to be using Fibonacci retracement. So what we're going to do is we're going to look for a swing and we're going to look for a certain percentage of the pullback. So here we go. We're identifying, we're going back to 2017 again. We're going to go over here, pick our Fib retracements. We're going to start identifying the swing down at the bottom, pull it up to the very top, and see whether or not the price is going to come down to a known Fib retracement. Notice that the ones that we're really interested in are 38.2, 50%, and 61.8%. So as we pull this along, where did the price come down to? And it came down to an area, in this case, this is the swing that was between April and June, and then pulled back into July, and it definitely beat the 50% retracement, did not get quite all the way down to the 61.8, but pretty close to it. That would be a great value entry. Instead of chasing the price up here at 2,900, getting something at 1,800 would be much more attractive to that. Now, these are not easy to get these entries unless you've already got a good till cancel order sitting in there. So if you'd had one in at about 2,000 or 1,950, the 50% retracement, you're in the trade and almost immediately offering relief. Does it feel good to enter those? No, it does not. But that's kind of the point here. So now we've got the next swing in place. It's starting at 1,800. Let's drag it along until we determine that maybe this swing looks like it's just about done. So rather than chasing after this swing, we've already got a position. We're just looking for the next entry into this swing. There's lots of different ways to do it. We're just showing you one potential way. Looks like the swing is done. It's gone from about 1,800 up to about 5,000. Let's pull our Fib tool. Fib retracements. We're going to draw this from the bottom, and I'm going to have to adjust that up to the top. Let's pull this down slightly. There we go. So now we have our Fibs set at 23.6, 38.2, 50%, 61.8. Notice also that we have a swing test here at 61.8 and the former high. You can see that one coming. So now what happens? The price comes all the way down to the confluence, not only of the swing test, which we just talked about, but also the 61.8% retracement. What a beautiful entry. Literally no heat on that one. All joy. Doesn't necessarily feel good as the price is coming down to your limit order, but you're looking for almost instant gains from there. Okay, let's take the next swing. Let's see what we can find. That's going to be starting at about 3,000. Let's see where this tops out and see if we can find an appropriate entry point based on a Fib retracement. So let's go. It looks like we've started to print the end of that swing. We'll find out in a minute. You never really know where the end of this is until you start printing lower highs and lower lows on the price. So now we've got the Fibs drawn. Let's see how far it pulls back. It looks like this swing pulled back to almost the 50% retracement. So again, if you'd had an order perhaps around in this area at about 5,600, that would have filled. If you'd been sitting there at a 50% retracement entry, no joy, it would have almost come down, almost filled you. But you can see how the price, after a parabolic move to the upside, in each one of these cases, a parabolic move to the upside where people are chasing after it, you get a significant pullback to get a value entry from these. Parabolic move, significant pullback. Parabolic move, pretty significant pullback. Although this is where the market started to run away. The further it runs away, the more shallow the pullbacks are going to be. So you're probably saying at this point, well, that's great for 2017. Let's look in the past and see how things curve fit. Let's go to today's market and start to look at some of the more recent swings. So again, we had a swing that began here at around the 5,000 level, and we'll pull this along, and it looks like, yes, indeed, we had a 50% Fib entry very briefly. Now, that was a spike entry. For those of you that remember this, this was I forget exactly what caused this. This is one of the exchanges, had a problem, and it offered an opportunity. So if you, instead of chasing after this market, you got a value entry somewhere around 6,600 instead of chasing it at 8,000. Now, as we came to find out, this swing was not exactly done yet. So we can simply continue the swing up here to where it finally finished out. Let's see whether or not we got a value entry for this swing. It certainly pulled down to the 38.2, and that was it. As I said, the stronger a market gets, the more shallow the pullbacks are going to be. All right, let's finish off with the last swing that started around just below 7,500. So we'll do the same thing here. We'll get our fib retracements started, where we're going to start them right around in this area. We're going to take them up to the top. And now you can see that the price within the space of 1 day has already pulled back to 38.2. 50% retracement would be about 10,600. And a 61.8 would be a very interesting number, which is 9,900. Now, everybody noticed the 10,000 level as the price broke up through it. Now 10,000 might be a target on the way back down. What I'd like to see here would be an undercut of 10,000. Breaking down through 10,000 is going to cause some temporary panic. People saying, oh no, we're going straight back down again. They were right. It is a bear market. And this is the point of maximum negativity that we're going to hit. And this is where the bears are going to jump on board again and perhaps create that toxic chemistry where too much negativity comes into the market all at once. It gets squeezed out to the upside. Now, you'll also see a swing test here at about 9,200. So to me, the zone of maximum opportunity is going to be somewhere here around 9,900, which is the 61.8% retracement, and down to the swing test at 9,200. Now, I know that there's a lot of folks that are out there talking about maybe 6,500, things like that. That would be an enormous retracement. Certainly, it could happen based on how strong this parabolic move was. But right now, with the market as strong as it has been, it's unlikely that we're going to get something which is going to start, quite honestly, a downtrend. If it breaks down below 7,600, that's a higher low. Then this becomes a lower low, and that starts the formation back into a bear market. I think that's unlikely to happen. To me, the maximum opportunity is going to be found between 9,200 to 9,900. Okay, so let's finish up and recap today's 1 minute market. Understand that both of the methods that I talked with you about today, swing tests and fib retracements, aren't particularly comfortable to take these entries at the time, as you're somewhat catching a falling knife. However, you are catching that knife after it's already fallen quite a distance. So those are just two ideas which can lead to some additional value on your next entry. And if you take them, please do so with a very small percentage of your total capital. And I once again want to caution you about combing the internet, looking for the perfect entry based on something that maybe happened once. Usually the techniques that appear to remove the most risk from investing are also the ones that don't work going forward. Successful investing is about using the probabilities in your favor and not looking for perfection. If you're looking for more ideas, hook up with our Omnia community at Ready Set Crypto, where we talk markets around the clock. Let me know what methods that you're using in the comments below, and we'll see you in the next edition of 1 Minute Market here at Ready Set Crypto.